So this week I wanted to talk about a stock which has been on an incredible run recently, and that is Ford. Now if we take a look at the daily chart, you can see where the run started, and that was driven by its quarterly earnings, which came in above estimates on the 27th of October, as you can see here. Now the previous high in the stock was $16.58 in June, and that was taken out on the day of earnings before a retest had confirmed this level as support. Now since then the stock is up 23%. Now price is currently pushing the $20.80 resistance level, which so far has held twice. This could actually represent a double top for Ford. However, if price were to break above this level, then $22.50 would be the next target, being the trend line connecting the highs from March and June this year. On the downside, price is well supported, as you can see here, around the $19 mark, with buyers coming in each time over the past month. Now in addition to earnings, Ford got a boost this week after both Ford and Rivian. Now Ford has a 12% stake in Rivian, which is an EV maker, with both companies acknowledging that they've scrapped previous plans to jointly develop an electric vehicle. Now that news gave investors confidence that Ford's electrification strategy is strong enough to proceed on its own. And you can see how the stock reacted. Now if we drill further into this, Ford has a 12% stake in Rivian. Now Rivian shares have skyrocketed recently, with Rivian having a higher market cap than Ford. Ford has a market cap of just under $81 billion, with Rivian having a market cap around $98 billion. Now Ford began buying Rivian stock back in 2019 and ultimately built up a 12% stake. Now reports suggested Ford accumulated around 102 million shares, spending $820 million in that process. Now from this data, Ford has purchased Rivian stock for around an average of $8.04 per share. Now Rivian shares are trading at $115 as of the 24th of November, meaning Ford's 12% stake is now worth $12.8 billion. So by selling these shares, which it no longer needs, since it's no longer partnering with Rivian, it can gain a big cash windfall and boost its own prospects of bringing out its own EV. However, the key levels to watch on the upside is $20.80 and on the downside is $19. Until one of those is taken out, price will continue to consolidate sideways in this bullish flag pattern that we currently have. So that's one to watch. Next up is Viacom. Now Viacom is a stock I've commented on in the past, and I wanted to give some focus this week as price approached a key long-term trend line, with price hitting a weekly low of $32.60, as you can see here. Now this is a major support level where a bounce is likely. If we look at the weekly chart, you can see how important this level is, because this is the level that price held early in the year in April and May, following that Archegos fallout, where the hedge fund had to liquidate its positions as it went under. So this level is big. Losing this level would potentially see the stock half in my view. Next up is NIO. Now I mentioned last week about NIO being able to shrug off the negativity following the miss in earnings from Alibaba. This week we got exactly that. A false break followed by a close back above the 200-day, as you can see here in the daily chart. However, before longs get too excited, we've been here before, where the price has looked like it's going to break above only to fail and fall sharply, as highlighted here. What this stock needs is a few consecutive days above the 200-day, because that would be a positive sign, and a break above 42.26 required ultimately to see NIO move higher in the coming weeks. Until this happens, price is likely to remain choppy and move sideways to up slowly. And to finish off, a quick update on Merck. I spoke about Merck needing a breather a few weeks ago after price ran into the 92 resistance level. Now this headline came out where Pfizer announced its antiviral pill, which reportedly had a 89% effective rate. And this saw Merck's share price tank as it reported its own antiviral pill for COVID, which had a 50% reduction in hospitalizations. Now if you cap that off with news that Buffett sold his entire stake in Merck, and you get one ugly sell-off. However, since then, price has stabilized, putting in a potential double bottom, which is a reversal pattern. Other indicators like the MACD and the stochastic have now also cooled off, allowing for another run at that key 92 level. It should also be noted that the FDA decision is expected before year end on their antiviral pill, Whilst the EU this week announced that it's expecting to provide its verdict on the drug within weeks. So there's positive catalysts in the pipeline for Merck. So that's one to watch. With that said, I hope you found this video useful. Remember to hit that subscribe button so you don't miss future content. And I'll see you at the next one.